Good morning, traders and investors. I'm Joel Elconin, along with Dennis Dick, Brent Slava, Jake LeCure, and Joe Young, and also the lovely Brianna Valesky. This is Benzinga's pre-market prep. Good morning to you.
Joel, are we live? Because I'm still getting off air.
Okay, well, Joe,
Yes.
what have I? Are we live?
Yeah, what have you did you
Wait, it's going now.
okay, it's go now. Go ahead, Joel.
Good morning, traders and investors. I'm Joel Alconin, along with Dennis Dick, Brent Sava, Jake LeCure, Joe Young, and Brianna Valesky. This is Wednesday's edition of Benzinga's Pre-Market Prep, brought to you by Options House. Joe, what do we have on the slate for today?
Well, it's Wednesday, Joel. You know what that means. Market Patterns and Trends Day with All About Trends is Harlan Payan. He'll be on at 8:35. And then at 9 a.m., we have returning guest Ronnie Moss, founder and director of research at Standpoint Research. He'll be on talking about his latest trips, his latest bouts of philanthropy, and I'm sure that Joel will have a few cunning questions for him when he comes on the show today, right, Joel?
Yeah, Ronnie's a good guy here. We'll have to review some of his calls from the past and what's going on in the future. Dennis, turning to the S&P 500 futures, we did make a new all-time high yesterday at 98.50. We've failed just shy of that level in the pre-market, 97 and a quarter. And just hanging out the lows here at the lows of 90.50. We're below Tuesday's low. Is this just a little launching pad to take that 1900 out today?
Well, there you were telling me yesterday that they did take out 1900 because the cash went over 1900. So I guess technically we went over it, but we always talk the futures, and I look at the futures, and I still say we haven't taken it out. So, what say you?
I go with the futures, man. You got to figure there's some juicy sell orders at a nice round number like that. You also got to figure some shorts are hanging out. Some swing traders like, okay, if it trades 1900, then get me out. And, maybe, some buy stops associated with it. But, yeah, I just consider the futures. The futures haven't
Were they all
traded.
on? But were they all on CNBC saying 1900? Did they have their 1900 hats there on CNBC? I wasn't watching it.
They did that before, Dennis,
They
because
already did that before the 1900
yeah,
hats.
they've already because we did that before when the
The
cash
cash
yeah when the
thing.
cash
Yeah,
index
yeah.
popped up. So
Well, we
uh,
don't believe it. We don't. We say we haven't hit 1900 yet because we only look at the futures here on this show.
that's
So,
right. I won't even
no, I've got my 1900 hat still sitting in the bag, ready to come out.
I won't even we don't even mention the cash. It's just irrelevant. If the futures trade all night in the morning and then the stocks just open up, where the futures tell them to open up. So looking at 1900 today, got to get through the pre-market high. Like I said, 97 and a quarter. Yesterday's high 98. We're $7 off that here. So don't call it a double top, but it looks like we have a double top.
Okay, well, we've got a exciting show here for you guys. We're going to talk about all those flash crashes that happened yesterday and the various stocks. Going to get to those in just a second. But first, we got Macy's breaking
Just
earnings here.
out.
Brent's there. What's
Yes, sir.
Macy's
Good
saying?
morning. They reported Q1 EPS 60 cents, sales 6.28 billion. The street was looking for 60 cents, so that is in line on the bottom line. They reaffirmed fiscal year 14 guidance. They raised their quarterly dividend from 25 cents to 31 and a quarter cents per share, and they also raised their buyback plan by 1.5 billion dollars. So a number of announcements coming out of Macy's with this earnings report.
Chopping around there on that chart, Joel. Looks like it went all the way down and all the way up and all over the place.
Yeah, let's just take a look at that pre-market action just moments ago. They had a spike down to 56.80, and from that 56.80, we have rebounded back up to 57. Oh, even higher than that. Slingshot it up to 58.55. So nice $2 move there in a couple seconds. No big deal. Let's go.
Drops to fade and pops to fade, all in the same trade, all in the same minute there.
Yeah, let's see what it did. I'm still knocking on the door here. That $58 level, Dennis did pop above there. You have to respect the action from the last couple sessions, right at 58, 57.83, 57.94. Go back a few more sessions. I see a high 57.90, 58.11. So 58's a big number. Do you have anything in the book there to confirm a seller at that level?
I don't see anything in the book, but I do see the level that you're talking about. That's what jumps out like a sore thumb there. Also, there's a couple highs around 58.49 and 58.48 back from just late April there. So a little bit above 58, you got sellers too. But somebody's sitting here. 58.08 trade pretty heavy. Now you got a guy with an iceberg order there, a guy or a girl at $58 not moving here. So somebody likes your level, Joel, and somebody is lightening up here at 58 right here, right now.
So what kind of strategy is that? Are you gonna would you take off along at that $58 level and
I just
miss?
took out the iceberg order. He just moved. So strategies
Okay.
change. That's how quick everything moves here on this show.
How much you think traded there on that iceberg order?
I don't think it was very big actually. 58.05 though just traded another 2,500. Somebody's like layering stock out there hidden. I was looking at the 8,900 print at 58.08. I'm just kind of going through the prints there. So it's starting to get bid up, but I had to chew through a little bit of stock there now. And now it's just trading up to 58.15, 58.25. I'm gonna sit back. I like the 58.50 number here still, but I'm gonna sit back and see where this thing is at 9.25 right before the open, and then obviously look at my opening strategies from there on it. So, if it's trading around 58 and a half at the 9:30 open, maybe I will try, a short there. But if it starts to get above there, that's, a key swing number there. So keep that in mind.
Yeah, final note, the highs on April 24th, 58.49. The highs on April 28th, 58.48. So there's your resistance in Macy's.
One more major earnings report, and then we're going to go jump into these flash crashes. But Deere reported here this morning 265 versus 247. So beat on the top, on the bottom line, but the top line missed 9.25 billion versus 9.65 billion, and they are taking the stock down here in the pre-market. It's trading right around 93 bucks right now, 92.95, which is down 70 cents from the 4 o'clock close. There's major resistance up there. Big institutional guy at $95, over 100,000 shares up there. That's 2 points away from here. But if it got crazy, you can see all those multiple highs up in the 94s. That's where, I'd swing the bat maybe from the short side. Right here, I'm kind of just doing the SOH trade, the sit on hands trade.
Can we restart the show? Because Ace slept in today and he missed the first 7 minutes of the show.
Oh
All
no. Hey,
right, all right, Ace. Yeah, that's one tardy. If that happens again, you're going to have to stay after.
I figure you can just listen to the show from bed pretty much, right? I don't know if that's an excuse, Ace.
Okay. All right. Looking at the pre-market trading, pretty volatile here, Denny. 91.44 is where they took it down to. Not much traded there. Now you've rebounded all the way back up to the 94 level. Keep an eye on 94. 94.06 was the high from yesterday, and then after that it opens up into the higher 94s, but looks like you're going to find some resistance here. Looking at the close from yesterday too, closed near the highs 93.61, but since they've already taken it down that low, I expect to find resistance well ahead of that major resistance at 95.
yeah, a little bit of selling here at 93, getting a little selling pressure down to 92.77 right now. But like I said, I'm sitting on my hands until it gets in the 94 handle, and then I'm maybe looking at it as a potential short.
Yeah, 92.91 yesterday's lows. That's an important level for it to get back above and hold.
We had a few other earnings report, Plug Power, SodaStream, Fossil. We'll get to those in just a second. But what I want to talk about now is these flash crashes from 349 yesterday. Bring up some of these charts, and let's start with Lorillard, LO. Some of these stocks move 7, 8, 10% here in a second. And you see these things happen, periodically. But this was a case where it hit over 20 different stocks. 4 or 5 of them had really significant moves. But bring up that chart from LO from yesterday, and you'll see this big spike down. Maybe you can zoom in and actually get a little closer look at that big spike down. You'd think that's just an erroneous print. Well, it is, but those trades stood. The stock went all the way down to $55 actually, LO, in a second at 349. I believe it was 51. So about 10 minutes before the close, somebody had a major fat finger, and they were speculating. This was on 20 different stocks, and they were speculating that or somebody on Twitter was actually saying, and this was actually a great point, that maybe somebody had a fat finger and they meant to send market on close orders and they sent market orders, because literally on a few of these stocks, it was like $10 million orders sent to buy on Caterpillar. On LO, it was a good $7, $8, $10 worth of orders sent to sell LO. And actually, there was a Bloomberg article that hunted down the trading firm that did this. They didn't want to be named, and it's all obviously their own information. So, but they were just saying it was mainly just a keystroke error there, something to do with closing orders. So then somebody was speculating on Twitter that it might have been a market on orders sent instead of market on close orders. So market on close orders, you get these imbalances, and institutions or even traders will send offset orders to counter those imbalance orders, and then that would interact with the liquidity at the closing print. But if you just send a market order for $10 million worth of stock, this is what happens. The stock just tanks because the liquidity is not on the book to absorb this, especially when you send it just to one exchange. And in the case of here, they sent it just to the New York Stock Exchange in LO, and the stock went all the way from 58.68 all the way down to $55 and immediately back at 58.68. So somebody just basically made a ton of money if you were sitting your orders out there, if you had those limit orders out there.
Did they bust some trades here? Because on my chart here on InfoRider, I'm seeing a low at 55.88. So and then I'm looking
They
on,
didn't they
yeah,
didn't bust on LO. So 55.01 I think it was the low on the LO, but bring up AOL. They did bust a few trades on AOL. So if you bring up that stock, the stock went all the way from 37 or 36 $7 basically. I'm just bringing it up on my chart here as well. All the way down to that low is 32.77. The only one they busted was below 33.17. They have what they call like a guidelines for when stuff like this happens, erroneous trade policy guidelines. And if stocks move so far, it's different parameters for different stocks. In this case, I think on the AOL was probably about 10%. So if you take $3.60, it was trading at 36.81, knock that off, you get a price of around 33.17. So they used that erroneous trade guideline and busted everything below 33.17. But still, obviously, you can see it still went down, and anything above 33.17 stood. So any traders that had orders sitting out there on the New York Stock Exchange would have been filled there. But this happens so quickly. If you don't have your orders out there, you're never going to be able to participate in something like this. And there's actually other trading firms and prop firms that what I call, place fishing orders, and they'll place these discount limit orders on all the stocks, basically sitting out there looking for, fat fingers or erroneous trades. And when something like this happens, they make a lot of money. Now the problem is, there's like 5,000 different stocks you have to be placing these orders on, or even if you want to do some of the main ones, it takes a lot of
a
buying
lot of
power to be able to
capital,
place
yeah.
that many orders. You can use hundreds of millions of dollars in capital to do this, so it's impossible for the little retail trader with his retail account, with a $50,000 retail account to do any of this. You could put out 7 or 8 orders or 10 orders, but I mean, what's the odds of that event happening to you? There's probably a better odds that you get picked off in a news event and actually lose money. So I don't advise anybody to do this, but that's what some prop firms are doing out there. They place those orders out there, and they'll actually, when a fat finger like this happens, they'll make some money.
Yeah, this was more of a stupid finger than a fat finger because you were trying to send market on close orders. Now, Dennis, what would have happened if we would have had like our designated market maker system where everything wasn't electronic like this? What would have taken place?
Well, a lot of different things happen. If you go back, let's say to the early 2000s when everything was done by humans, if this order for $11 million worth to buy of CAT or 10 or $12 million to sell of AOL was sent to the NYSE floor as a market order, the first thing the specialist on the floor back then would do is go one up, is what we call it. He'd put 100 shares on the bid, 100 shares on the offer, meaning he's got a big order to work here. So it takes some time. So if you had just sent that $11 million sell order on AOL to the floor and it went one up, you could be like, oh no, I didn't mean to do that. Cancel, cancel. It probably gets to the specialist in time that he'll actually let you out and cancel that order. Sometimes there's spot checks if the orders seem really crazy that the specialist would actually call back and say, is that really what you want to do? Like just verify it. So there was like a human check to the whole thing before. Now with instantaneous execution, you press that market sell button, you are done instantly. There's no oops, I can't cancel that, cancel that. I marked it wrong. I meant to mark it on close. I marked it, mark it, and I don't want that to happen. It's just done instantaneously. So you have to be very careful, especially if you're an institutional trader with big money, that all your order ticket is filled out correctly, because when it's not, there's no turning back. There's no time to cancel. And that's where, speed actually maybe isn't as good in this case. Everybody likes their instantaneous executions, but when you make a keystroke error, you make an error, you pay now. There's no turning back.